We're going to take a look at Nvidia and the results that are expected this week, and really more importantly, this pattern they have of beating and raising by about 4 to 5 billion every quarter and beating and raising by 2.5 billion every quarter. So we'll just start off with the estimates and we'll take it from there. Right now, analysts are looking for 38 billion this quarter in revenue, 73.5% gross margins and earnings of 84 cents. Next quarter, they're expecting revenue of 41.8 billion, gross margins 72.2%, and earnings of 91 cents per share. But Nvidia has really sort of delivered, and in every quarter they're coming out and beating analyst estimates by about $1.5 billion to $2 billion. But really the pattern is a little bit deeper than that. And what's really interesting is how Nvidia guides. For example, last quarter they guided to $37.5 billion in revenue, and that was, about $5 billion higher than what it was the previous quarter. The quarter before that, they guided, $4 billion higher than the previous quarter. The quarter before that, they guided $4 billion higher than the previous quarter. You can see this pattern of $4 to $5 billion in guidance increases basically every quarter going back to April of 2023. And what's also interesting is that they not only tend to guide higher by $4 to $5 billion, but they also beat that guidance by about $2.5 billion. So here you can see they guided to 11 billion. They reported 13.5 billion, beat by 2.5 billion. Then they went out and raised guidance to 16 billion for the next quarter, a $5 billion increase in guidance from the previous quarter, and a $2.5 billion increase versus the current revenue number. And they've been doing the same thing now for several quarters in a row. 2.5 billion beat, 2 billion beat, 2 billion beat, 2 billion beat, 2 billion beat, 2.5 billion beat. Then they came out and they've been raising guidance versus these revenue numbers: 2.5 billion, 2 billion, 2 billion, 2 billion, 2.5 billion, 2.5 billion. So it sort of leaves you in this mindset that they're going to have to come out and not only report better than expected numbers, they're probably going to have to report numbers that are about $40 billion, which would be about 5 billion more than last quarter, and they're probably going to have to guide the street 2.5 billion above this to make it 42.5 billion, and that would kind of keep with the patterns we've been seeing. But as you can see, the street is only looking for 41.7, so that analysts seem to be getting closer, but the company still continues to come out and beat those expectations. And so what this is telling us is that if the company comes out and beats analyst estimates this quarter, they're just simply not going to be good enough. They're going to have to be able to continue to deliver not only what the pattern that the street has gotten used to seeing from them of this beating by $2 to $2.5 billion on revenue versus their guidance, and then raising their guidance by $2 to $2.5 billion above the current quarter numbers, or $4 to $5 billion above the previous quarter's guidance. It's a very high hurdle, and clearly, it gets harder and harder to do the bigger the numbers get, and it also gets harder to do, the more times you keep repeating the same pattern, eventually that pattern is going to break, and whether or not that pattern breaks this quarter is clearly something we're going to have to just wait and see. But the bigger issue is that implied volatility for Nvidia is super high going into these results. Right now, with the stock trading around 135, we have implied volatility at around 88 to 90%. And this implied volatility is going to continue to go higher into earnings. It probably will top out well above 100% by the time we get to Wednesday's results. And that's going to create another problem because we have basically all this gamma and delta positioning in the marketplace that's going to make things a little bit more challenging. In fact, when we look at where the positioning is and we look at the net gamma out there, what we see is that there's a lot of gamma built up at this 140, 145, 140, 150 level. Basically, what I did was I took all the open interest levels from Friday and then, ran it through and took the gamma values that the market was trading at on Friday afternoon and came up with this net gamma level. And this is going to change, obviously, because open interest levels change every day. The stock price changes every day. So it could be a very different looking picture by the time we get to the results. But right now it looks like the flip level is somewhere around 133, 132 is a zero gamma level, where right now above 134, call it 135, market makers are basically going to be suppressing volatility. But if we were to see the stock slip below this $130 level or so, you're going to see market makers begin to start going with the stock going lower, becoming sellers of the stock in a negative gamma zone. But really more importantly is that with implied volatility as high as it is, you're going to see this implied volatility begin to melt once we get past earnings. Implied volatility will drop sharply. Could drop from, an 80, 90, 100% level to something like a 40, 50, or 60% level. And that's going to make all these gamma values go down. And you're going to see that it's going to reduce the amount of gamma out there, and it's also going to reduce the amount of delta that's been built up out there. And, right now there's just a lot of positive delta out there. And that means that when implied volatility drops, puts and calls lose value. That's going to reduce the amount of delta exposure in the marketplace. That's going to mean that market makers are basically overhedged, especially with delta being positive. It's going to mean that market makers are basically going to become sellers of this stock once earnings come out on this week. And so what that kind of shows us from a gamma perspective is that right now we have this big area of gamma built up around 130, 140, and 150. With the market expectations in such a position of beating and raising by $2 billion on each side, it's going to be really hard for the company to really come out and beat market expectations and really drive the stock above this $150 level. Now, again, a lot of this can change between now and Wednesday, but that's going to make things very challenging. And essentially, all of these gamma and delta values are going to compress following the results. And you can really see it very clearly also on a technical chart, because you can see how 130 has been a really big, important level from a technical perspective, really going back now to some time. And there's a reason for that, right? Because that's a big level of gamma. It's a big option strike price. You can also see how 140 has been a big level of support and resistance in the past. And you can also see how 150 has been a big level of support and resistance in the past. And that's because these are big levels, not just for this week's option expiration, but for option expirations in general. And so basically at this point, if this company comes in and does what it typically does, it's not going to be a surprise to anyone. It's pretty easy to see this pattern that's been going on. It's probably what the market is expecting. So it's very possible that Nvidia comes out and reports numbers that are better than what the analyst estimates are, but just aren't quite as good as what the street has gotten used to. And with all of this option positioning right now in such a way that the market thinks the stock is going to go higher, basically betting on it to go higher, the results may end up being that they can report better results that just aren't good enough, and the stock actually goes down. And if it breaks the 130 level, I think it has an opportunity to move all the way back down into the 115 level. The other thing, obviously, is if you kind of go through and you look at the options and you use a long straddle strategy, market's right now pricing in about a 9% move in the stock, either up or down. And so a 9% move down would take you back to this about 120 level. And that's probably what you would be looking at again, this 115, 120 level, if the company comes in and just does what it normally does. Anyway, I hope you found this helpful. Please remember to subscribe to this channel, like this video, share it with your friends. I'm still trying to grow the channel. Sorry, I've been off and on the last couple of weeks. Kids were sick. Then they got sick again, and then I took a little mini vacation with my family when they were on for school break. So I'm going to be trying to get back into the routine of things going forward, so you'll be hearing from me on a more regular basis again. So make sure you tune in, and we'll see you again soon. Bye.